Hello everyone, and welcome back to another episode of Talking Trusts. Today I'm joined by Georgina Brittain, who is the manager of the JPMorgan UK Smaller Companies Investment Trust. So Georgina, thanks very much for joining us. You recently celebrated your 25th year in the role, so congratulations first of all. Hopefully, given that you've been in the role for that period of time, there's something that you find compelling about the UK small cap space. So can you talk through why investors should be interested in space?
Well, you'd very much hope I'm finding it interesting 25 years in, otherwise my life's gone very wrong. No, I mean, it was fortuitous that actually the first area of the market that I ever covered was UK small caps. 25 years later, I still am because I find it absolutely the most exciting area in the market. We get the new companies, the young companies, the companies that occasionally can go all the way from little 100, 200 million up into the FTSE 100. You know, we get to see it all. We get to see the good, the bad, and the ugly.
Okay, well, your career has sort of aligned with quite an interesting period for UK companies, because if you look at the proportion that UK stocks comprise of the global index, it's gone down quite a lot. So can you talk about sort of some of the changes you've seen at that time? Do you think that the opportunity set is better than it was? Are there more sectors to invest in? Do you think the change has been positive or negative? What's happened?
So isn't it the Chinese who say, may you live in interesting times, and they don't mean that in a good way? Yeah. I think, no, it's absolutely true. You know, we have seen a decline in the size of the UK market in the MSCI. I mean, there's absolutely no doubt about that. But it's much more, I think, about, you know, the top end of the market rather than small caps. If you look at IPOs, and I know we can't really talk about them at the moment because there haven't been any for well over a year, pretty much. Actually, this is where they come. So we get fresh blood coming in. As I say, you know, last year hopefully was an anomaly, but you know, we get fresh blood coming in. So again, you know, we will see some of the, for example, fintech. You know, the smaller companies will come to market and say, hopefully, you know, grow over time. So opportunity set for us is always changing because, as I say, you get these new companies with, you know, new areas of the market coming in, and I think, you know, for us again, it's always expanding. Also, in terms of how we run the investment trust, there's just a size limit. We need companies to be of a certain size to be liquid enough for us to invest in, and which is circa 100 million market cap. But always, you know, you've got small companies that we're just watching, and they get 50, 60, 70, 80, 90, they get to our area. You know, there's a lot of growth, despite what's going on in the broader economy. There's a lot of growth in a lot of these companies. So, you know, our opportunity set is always vibrant. Yeah.
So, I mean, one of the things you touched on there was sort of fintech, and I think that the perception a lot of people have of the UK market is that it's sort of old world. There's a lot of commodities, mining, energy, big banks, things like that, and perhaps not the sort of exciting companies that you're talking about. At the same time, that is generally the larger companies. So can you sort of talk through? Do you think that's a fair perception, also, or reflection of the UK small cap space as well?
No, absolutely not. That is very much the FTSE 100. Although, of course, there are some very, you know, vibrant and hugely successful, obviously, companies at the top end of the market. But no, yes, of course, we have the oil companies in particular. That, you know, there are a lot on AIM, small miners, etc. But it's such a small part of our broader universe. Tech, again. Understandably, people bemoan the fact that in the broader market, you know, we don't have the large technology companies. Over time and all the time that I've been running money, you know, you watch them get taken out. That's, you know, what happens to a lot of the larger ones. Again, a vibrant, absolutely vibrant area of the smaller cap market. So, as I say, you know, when I say it was fortuitous that, you know, this is the area of the market I started in. It's because, you know, we get the fun companies, we get these exciting companies, you know, down in the smaller cap area.
Yeah, and well, can you talk a bit about what companies you do try to invest in or look for at JMI?
Yes, of course. So while our remit is not growth per se, understandably, our focus is on growth by and large, because of course, as I said, the idea is you buy a 100 million market cap company and it grows into 2 billion. You've made 20 times your money. So you only do that by buying the right companies, but also companies that are growing. So you sort of, with that as the backdrop, what we focus on is sort of a few very specific sort of qualities. I mean, we actually focus in particular on the quality of a company, and there isn't a fund manager live who won't say that. That's kind of a given. But for us, when we talk about it, we're talking about actual metrics. We're talking about numbers. So we look into balance sheets. We look into return on equity, return on capital, etc. So it's measurable for us. So and with high quality, very often will come high free cash flow, and that is probably the most important metric for us. So we invest in profitable companies. We don't invest in blue sky. And there are a lot of blue sky small cap companies, some of whom will undoubtedly do extremely well. But for us, we need to see that you're making money, and most importantly, you're producing cash. So free cash flow is the go-to metric for us. It's how we value companies, and then we look for momentum, and by that we mean really we focus on earnings momentum in a big way. So what that means, as we all know, a company has estimates out there in the market, and we like companies to absolutely deliver on those metrics, but preferably to actually be getting upgrades. So what we're looking for is high quality companies that throw off a lot of cash and are beating their own expectations and stock market expectations. Okay. And we keep finding them.
Yeah, I'm sure you do. Yeah. One of the points that people tend to make about the small cap space is that you have sort of greater opportunity set because of the lack of coverage. So I suppose to go into a bit more detail, if someone doesn't understand what I mean there, basically if you look at the larger UK companies, you have a lot of analysts, investment banks and so on who are doing research into them. This is not so much the case for smaller companies. Does that help you in any way? I mean, does that provide provide greater opportunities? Can you talk through sort of how that process works?
No, great question, and the answer absolutely is yes, because as you say, Glaxo Wellcome has, what does it have? 80, 100 analysts covering it. Probably pretty much anything anyone ever wants to know is out there, and it's in research. For us, as you said, a few of our companies are literally only covered by one analyst. Really quite a scary number, only by two. So yes, very, very under researched. That is perfect for us because that provides opportunity where other people aren't looking. So basically it will tend to mean that the companies are undervalued until they gradually prove themselves and get known and get further coverage. So we look at everything. That wouldn't be a starting point for us to say, how well researched are they? But because we'll run screens and companies will pop up. And when I say we, so obviously my colleague Katan co-runs JMI with me, but on our team we also have our analyst Ed. He's also a fund manager. He's involved in other funds, but for small cap he's a pure analyst, and he loves it and he's excellent at it. So he will do the deep dive research himself, and that is a big advantage for us.
Yeah. And to change tack a little bit, I think if you look at small caps, and this is true not just of the UK, of the US, basically everywhere over the past 18 months, has had quite a tough time. I think people have been, there's a variety of reasons for that. I think mainly, valuations in some cases are quite high, so they've come down. Also people afraid of what a tougher economic environment will mean for companies that maybe don't have the size and scale to withstand those sorts of shocks. So how have the companies in the JMI portfolio held up? Are you upbeat about their prospects? Are they managing to hold up so far?
Are we optimistic? Yes, always. That's why we own them very, very clearly. But yes, it's been a very, very tough time in this area of the market. I mean, and others, so small and mid caps. I think in part because, as we've already touched on, the UK itself is out of favour, and that has repercussions all the way down to the small cap. But for us, we've touched on this already. You know, I've been running money for a very long time, so I've seen, I've seen the tech boom and bust. I've seen the global financial crisis. I've seen pretty much. It feels like I've seen it all. So I know that it's very possible to find small companies that can grow regardless, literally regardless of the backdrop, because they're not driven by, GDP in the UK and whether we do or don't go into recession, because they're small, they've got a niche, they're nimble, they need to be well run, and it's absolutely possible for those companies to, thrive completely despite the backdrop. That's what's very special about this area of the market.
Okay. One of the things you just touched on there was sort of negative sentiment towards the UK. We spoke about that a bit earlier. I think that's really come into play since Brexit. And if you look at it, it's true sort of across the board. I mean, personally, I look sometimes at valuations and kind of can't believe what's going on. Maybe you have the same reaction sometime. But if you look at the market as a whole, I think I checked last week the MSCI UK index relative to peers. On a PE basis, something like 40% below most other peers and also below its own historical average. That's obviously for the market as a whole. Do you see something similar playing out in the small cap space as well?
Yes. Overall, it's extremely undervalued. I mean, you just every metric shows you that. Can stay undervalued for a while longer. You never know what the trigger is going to be, but at the end of the day, valuation will out. That's what all history tells you. Yeah. I don't know if you were going to ask me about this, but the other side of that, what everyone will be aware that we're seeing is takeovers. Yeah. And for us, that is validation of the fact that the values are wrong. In particular, sterling has recovered quite a lot, but we still look very cheap to, for example, US investors. We look cheap because of the currency, and then you find these amazing companies on very low ratings. Guess what? They get taken over.
Yeah. So, I mean, to finish off, and this is more of a sort of meta question rather than specific to the fund, but do you see that as a positive or a negative? Because on the one hand, it's sort of validating the idea that, yes, valuations are low, yes, these are good companies that people should potentially be investing in. But on the other hand, I think one of the things we spoke about earlier was the fact that people can be frustrated by the idea that there's no sort of more innovative companies in the large cap UK space. So does the fact that it seems like if all of the good companies are being picked off early on, that can kind of have negative implications for the market potentially down the line. So do you think that's the case or no?
I think it's a very good question, and it is something we think about. So for us, when one of our holdings, one of our companies gets bid for, we obviously on the day it's like, oh great, I'm having a good day. We're making money. We're making money for our investors, which let's be clear is why we're there every day. But actually, what you want to look at is the valuation stating the obvious, but you need to look at the valuation that they're paying and work out if you think the company was going to get there anyway, and in what time frame. Are you happy to take the money today, move on, reinvest? Because as I say, we always have ideas. We always have other companies we want to invest into. So absolutely, there are times when we vote against. We say, no, absolutely the wrong price. I mean, nowhere near the right price. There is no, you're simply not in the right ballpark. I don't mind if the shares go down again tomorrow because the bidder walks away. I can see that I'm going to make far more money over time in this company. So it is about, are you paying me tomorrow's price today and plus, or are you just chancing your arm? And the answer is no. So horses for courses. Okay, so one last question would be, we've talked a bit about how there's been valuations are low, there's been lots of volatility in the past 18 months or so. Has that let you add to the portfolio or to existing positions? So in a word, yes. For us, ideally no one likes volatility. We'd all like markets just to go up. It would be great. It isn't like that. It hasn't been like that for really quite a long time, as we mentioned, pretty much since Brexit. So only way for us to deal with it is to use volatility as an aid. So when mainly companies that we already own, when prices are hit for no reason, but the broader market, you will see us buying more. You will see us adding to positions. Occasionally, there'll be companies that we're following that we really like, but we don't like the valuation, so we don't own them. Again, volatility can be our friend then. If the prices come back to the level that we're happy with, you will see us step in. So as I say, the only way to deal with volatility is to take advantage. Be brave, be brave.
There you go. Well, that's a good note on which to finish. So, Georgina, thanks very much for joining us. And for anyone watching, if you are interested in learning more about the trust, then head over to the Kepler Trust Intelligence website, and you can find a lengthy research note there to read. So, thank you again, and see you next time.